Exchange at 25 Broad, sponsor of this webcast, invites you to visit our remastered model residences.
Good day. I'm Abby Overton, and this is The Real Deal. At the top of the news, the Goldman Sachs Group receives approval to build a 30-story Jersey City tower and a tax break of about $4 million. An unidentified real estate firm is looking to purchase Knickerbocker Village on the Lower East Side for $250 million. And Governor Spitzer and Manhattan Borough President Stringer closed the loophole on Mitchell-Lama market rate conversions. That and more on the Real Deal webcast this week. But first, some highlights from this week's interview. With the subprime fallout affecting almost all of the major national markets, foreclosures on properties have also been on the rise. Even New York City is not immune to the market declines, and to find out just how much we've been affected, we talked to that up-and-coming real estate data collection company, Property Shark. They recently released their second quarter foreclosure report for New York City. Real Deal reporter Jen Benepe spoke to Property Shark CEO Ryan Slack to learn more.
You reported a sharp rise in foreclosures citywide in the second quarter. Can you talk about where the biggest increases occurred?
Well, in New York City, the biggest increases were definitely in Queens. We've seen an increase of nearly 102% in Queens, so that's a doubling in 1 year.
And how's Manhattan doing in the second quarter?
Manhattan continues to be very strong, quite protected from foreclosures. Foreclosures in Manhattan are about 6% of the city as a whole.
Should we expect these kind of increases also in the second half of the year?
Absolutely. I think the trends we're seeing in foreclosures right now are just the beginning.
For the full interview, click on the link below. And now for the news. The Goldman Sachs Group received approval to build a 30-story Jersey City tower that would give them an annual tax break of around $4 million. Their second tower in Jersey City, Goldman will begin construction in 2009 after it finishes its $2.4 billion headquarters in Battery Park City. Goldman's first Jersey City tower was only 60% occupied, and some critics say the bank exploits corporate tax breaks without delivering the thousands of jobs it should foster in exchange for the subsidies. An unidentified real estate firm is looking to purchase a huge affordable housing complex on the Lower East Side for $250 million. Tenants at Knickerbocker Village say the New York City-based real estate company met with them because the almost 1,600-unit complex is still protected by an arcane public housing law dating back to 1926, which requires that tenants be consulted before conversion to Article 4 co-ops and if rents are raised. Residents say the price was too high for the prospective buyers to maintain affordability. Governor Eliot Spitzer and Manhattan Borough President Scott Stringer announced a regulatory decision on Monday that closes a loophole affecting Mitchell-Lama rental buildings constructed before 1974. The loophole allowed landlords who were taking properties out of Mitchell-Lama to claim that leaving the affordable housing program qualified as a unique and peculiar circumstance and allowed them to hike rents to market rate. Because of Monday's decision, thousands of units that could have been subject to market rate rents will now be protected by rent stabilization. It's the story of another site originally slated for condos that will now become a hotel, this time in the fast-appreciating area of Lower Manhattan. Boca Raton-based EB Developers recently bought 133 Greenwich Street near Ground Zero from the Cooper Group for $45 million. They're planning to build a hotel. The sellers, a consortium of Israeli-based investors, originally purchased the site for $20 million in 2005 and planned a 30-story condo building. EB Developers said a hotel makes more sense given the heavy foot traffic and tourism around Ground Zero. Some prospective Hudson Yards developers say the request for proposals the MTA issued a little over a week ago has serious drawbacks. The potential deal breakers include a requirement that office towers be clustered in one location of the 26-acre site, the premise that financial companies wouldn't want to be located above train tracks, and no guarantee that the MTA will complete the construction of the No. 7 extension to 34th Street and 11th Avenue. Sources say the city has reversed its plans to close Red Hook's container port. Originally, the city had backed the waterfront area's $56 million cruise ship terminal to replace the container port. At the time, the city's Economic Development Corporation estimated that the terminal would generate 370 jobs, but after a year, only employed 14. Rents on Class B properties in Manhattan rose at a quicker pace in the second quarter than rents on Class A properties, according to a report from Jones Lang LaSalle. The results show a continuing trend that began in the first quarter of this year. Average rents in Manhattan's Class B buildings went up 12%, hitting almost $52 per square foot, while Class A rents rose a more modest 7.8% to almost $80. Midtown South, where Class B rents rose 14.4%, posted the biggest average increase of any submarket in the second quarter. Stribling Marketing Associates has replaced the Corcoran Group as the exclusive sales and marketing agent for One Hanson Place, known as the Williamsburg Savings Bank Tower. The Dermott Company and Canyon Johnson Urban Funds are developing the landmark building, which is Brooklyn's tallest skyscraper, into a 189-unit condo. Although sales at the tower were going well, One Hanson's priciest units, including its penthouses, which are expected to fetch between $4.5 and $8.5 million, are yet to be sold. Thank you for joining us for this edition of the Real Deals webcast. Remember to click on the link below for this week's interview. Please join us next week for the latest real estate news. I'm Abby Overton, and this is The Real Deal.